Every 4 years, we look to polling to gauge what Americans actually want. But polling is increasingly noisy. People change their minds, they answer strategically, or they simply refuse to participate. If you want to know what people truly value, you don't ask them, you watch where they move their money. It turns out the Internal Revenue Service compiles a massive data set on this exact preference. By tracking address changes on the standard Form 1040, the IRS captures the physical movement of millions of households every year. This data goes beyond counting moving bodies. It tracks the exact movement of adjusted gross income, the total taxable wealth that those households take with them when they leave. The result is a mathematical ledger of economic migration. It creates a map of where America's money is actually going. Historically, these IRS records showed predictable regional fluctuations. Wealth moved between neighboring states as local industries grew or shrank, usually without extreme imbalance. But the data spanning 2012 to 2023 reveals a significant shift in that pattern. The volume and direction of wealth movement have broken away from historical norms. These new returns show migration patterns aligning with political identity. Instead of wealth moving between neighboring regions, capital is flowing out of specific partisan jurisdictions and concentrating in their direct rivals. When trillions of dollars relocate along these lines, we have to look at exactly which political economies are inheriting that wealth. We can audit the losses by looking at the 19 states, plus the District of Columbia, that voted for Kamala Harris in 2024. Over an 11-year period, these blue states suffered a net loss of nearly $2 trillion in adjusted gross income. California sits at the top, losing a net $660 billion. New York followed with a $560 billion loss, and Illinois dropped $399 billion. This represents more than just a change in a spreadsheet. It is the physical removal of consumer spending and economic energy from major population hubs. These hubs are now facing a sustained and significant financial vacuum. To see exactly where that wealth landed, we look at the 31 states that voted for Donald Trump in 2024. The corresponding side of the ledger shows a total gain of nearly $2.2 trillion for these red states. Florida was the primary beneficiary, absorbing $512.9 billion. Texas ranks second with a $371 billion gain, followed by Arizona and the Carolinas. This capital is driving rapid growth in Sunbelt metropolises, funding the infrastructure of expanding city skylines. While people often discuss weather or housing costs, the IRS data shows a migration that maps almost perfectly onto the country's political divide. A shift of this magnitude creates a new kind of economic gravity. It changes the future trajectory of both the states people are leaving and the states they are entering. For the blue states, losing the wealthiest taxpayers makes it difficult to maintain state infrastructure. They are left with the same rising costs, but a shrinking pool of resources to pay for them. The red states face a different challenge. They must manage an unprecedented economic boom, while their housing markets, roads, and local resources are under intense pressure from the rapid population growth. Both sides of the divide are now dealing with opposite economic pressures created by the same migration event. The ideological divide in America is no longer just a matter of opinion. It is now reflected in a structural relocation of wealth. This conclusion is based on the most rigorous financial audit available, the tax returns filed with the IRS. This massive $2 trillion shift represents a permanent, long-term relocation of the nation's most valuable taxable resources. When Americans choose where to live and where to file their taxes, they are